Good morning, everyone. Welcome to another Wealth Coffee Chat. Good to see a few of you out and about already in the mornings. Alex is already up and at it. Beautiful morning in Cairns. That's fantastic. Brad, good to see you, mate. Justin's here as well. Luke, Andrew, Tim, Bryce. Howdy, folks. Good to see you. Thanks for joining for another Wealth Coffee Chat. Thankful Thursday. While things are getting going, I'll do the quick intros as we do. Jason Witten's my name. If you didn't already know it, most of you do though. But if you're new, say hello in the chat. Let us know where you are in this wonderful world, where you're coming in from. And let us know what you're up to. We do a little Wealth Coffee Chat. This conversation, get together in the mornings, around about 10 past 8. 10 past 9 now in the southern states, folks, in the southern states. But you guys know the drill. Each morning we get together, have a conversation around the idea of property investing and making sure we go the distance. Just realised my hair's a bit wild there. I think I need a haircut. Anyway, I'll push on. I'll move on. Good to see you here with me this morning, folks. The other day, we had a quick conversation, a quick chat with some of our coaches and some of our team who are always conversing with you guys in our coaching and mentoring program. And they were talking about a few things, a few concerns, a few things on people's minds. And, what are the things that might be holding us back as investors or giving us some uncertainty in the marketplace. And I want to talk about one of those today, but thought I'd quickly do something this morning. What is something that right now, one or two or three things that there's some uncertainty for you? Something might be holding you back or making you uncertain about making a decision or investing as a property investor right now. Put it in the chat for me so I can get a bit of a feel of what's going on for you. I'm going to talk about one of those today, but there might be a few others that might be worth talking about. But what's on your mind? What's something that's uncertain for you as a property investor right now, or something that might be holding you back from investing? Maybe you can, and you're not. Okay, yep. We've got job security. Got the Middle East tensions. Yep. Some job security. Fair call. Some Middle East tensions there. Morning, Alison. Good to see you. Okay. Inflation rate rises. Yeah, and that's certainly one of them for many of us. The other night we had Dr. Andrew Wilson come on. Elbow. Yep. They're all a bit mad, those politicians, aren't they, Alex? Servicing, income servicing, lending. It was an interesting conversation in and around that, and that's the general theme. That's the general theme we've got out there in the marketplace, which is okay. What does the future hold for us as investors? And what do things look like, right? So, okay, cool. Well, let's have a conversation in and around a few of those things today, and let's riff on that a little bit when it comes to today's Wealth Coffee Chat. Let's talk about the first one, which a few of you guys have said, all right, well, what does the future look like? Serviceability, the ability, let's say, over the next, let's call this today, 1, 2, 3, 4, and 5 years. What does that look like into the future when it comes to, let's say, interest rates? Now, the other night we had a conversation with Dr. Andrew Wilson. A few of you guys may have been there, and he talked about a leading measure to the future uncertainty. And there's two future uncertainties that we always hear from investors and also ourselves. Number one, interest rates, right? Interest rates. Now, it's always good to talk about interest rates and say, okay, will they go up? Will they go down? And by and large, by default for us as investors, because we're in the acquisition phase, the let's buy something now phase, or soon to build our portfolio, where it's about servicing, right? As we go. So interest rate rises. Will it go up? Will it go down? Will it go flat? The general consensus right now from Dr. Andrew is that they will stay flat for a fair while, because there's a couple of leading indicators that need to be under control, right? And the one, Luke was talking about it before, the idea that actually it was Tim, the idea of inflation, right? So at the moment, the general indicator says that by and large, let's say for the next couple of years, it'll be flat. There's a few pundits out there, some of the main banks saying it might go down a little, and some saying it might go up a little. But by and large, the general consensus is it's about where it's going to be, folks. It's about where it's going to be. And so if we're thinking, okay, will the last 12 months of cost uncertainty be the same as the next 12 months or the next 24 months? The answer is a pretty resounding no. Okay. The one thing that, Dr. Andrew said, got to keep an eye on fuel, oil, blah, blah, blah. But by and large, we are where we are, right? So interest rates flat. What's our hedge in there, folks? What's the kind of the offset, the hedge for interest rates as property investors? If we own properties other than our own home, owner-occupier, what's the hedge on our properties? What's the offset for our rental properties, folks? And it's good to see a few things happening in the world of, madness when it comes to politics and malarkey. Our number one menace, our hedge, our offset, our insurance policy when it comes to interest rates, folks, which often is a little bit more delayed. It's our rents, right? Our rents are still going up, putting the rents up. Exactly, Luke. Now, don't rest on your laurels, folks, okay? Put your rents up because most of us are sort of 12 months, sometimes even longer, 2 years behind what's actually happening in the market. You can't miss out. You can't miss out on that because your costs have risen, okay? So that's interest rates. The general consensus is it's flat, maybe a little down, maybe a little up, but in general, we are where we are, folks. And there's an outlier, a 10% outlier that inflation might get a bit crazy and something else might happen. But the general gist of it is we are where we are, and that's where it's going to be, right? So interest rates, if I was to say, and I do, I'm in a coaching space, I think we're going to be fine. I think you can rely on that being fairly consistent for the next little bit. What's the other uncertainty out in the world where we work in? We work in the world of new real estate. That's our specialty. And we have a question often for our investors. Luke's talking about, hey, maybe getting rid of a C grade property to upgrade. I think that's actually a smart move, Luke. If you've got a C grade in your portfolio, and you can sell and buy. This is the thing with a lot of servicing or a lot of investors. Sometimes you sell something and you didn't do the math to see if you could actually buy something better. And unless the thing's an absolute dud, a piece of junk, you're better off keeping the property, depending on its numbers, obviously, than selling the damn thing. All right. So, trade a C grade to an A grade. I am all for that, for sure. Do your numbers, though. So the other uncertainty in the world of property investors, certainly when it comes to newer property, folks, is the idea of builders building and construction. Uncertainty, which is fair, is that uncertainty which is fair feedback is that, okay, well, what's going on with all these builders going broke? Well over 2,000 folks. That's a lot of builders. 2,000 builders, builder developers going broke in the middle of many projects around the country, those construction projects and houses and townhouses and apartments, struggling to be built and taking a lot more time. What's the uncertainty there? How do you navigate that? And that's what I thought we'd have a quick chat about as our second one as well today. Brendan is saying, okay, seeing lots of a bit of slowdown in the major regional centres. Yeah. And, I talked about that a couple of years ago, Brendan, when there was, during COVID, there was this, conversation where, people would move to the regionals for less restrictions when it came to lockdown. It's a nice idea. I grew up in a small town and I've lived in many small towns, and they're an acquired taste, folks. If you've never lived in a small town, well, it's certainly different to a large town. Some people love it, but most people who've lived in a city or whatever and go to a small town, they're like, this is not for me. They come back, they leave. And Tim, by and large, most of the jobs are in the cities. There's a bit of a push to get people back to the office. That stuff's, pretty obvious at the moment. But we've got 2,000 builders gone broke, folks, over time. Yeah, Darwin's just a town. I don't even know. It accidentally got the capital city of Northern Territory. Anyway, so 2,000 builders going broke. What's going on in the world of construction? Well, this was from Dr. Andrew the other night, but it's really poignant, right? So we've seen, if you purchased, and this is an interesting one. If you were, lucky enough to get yourself a piece of real estate kind of in this section, and let's say, and this is kind of, off the plan or a delayed sale. Let's say you purchased, let's say a builder, let's just quickly look at, the challenge of the problem with this uncertainty, right? Let's say in 2020, you purchased a property for 650,000 off the plan. Okay. You said, all right, off the plan, nice apartment, even a townhouse, even a house at that point in time. As you go along, you could have, easily got a pricing for that one, but the house would have been built a little faster, right? Let's say you purchased it at that point. We had some lockdowns and some delays. They got their costs in. They purchased the land. So the land was locked in. Construction, they had a contract and they thought, yep, tick, tick, good to go. Had some delays. And what happened for the builder, let's say they started here and they had to deliver that property over 18 months, all right? In the middle of, the largest, increase in the construction supply chain. Now, some suppliers, timber and this and that and the other, some builders may have forward purchased some of their not equipment, materials. that might have been done. But by and large, what happened, folks? What happened? The cost to deliver that property or the thing, went up sort of 20 to 25%, right? So they had a fixed price. They had a fixed price on there. They said to whoever the developer was, if the developer was the builder or whatever it was, or the builder was separate, they had a fixed price. Often they get a fixed contract, so they fixed it, let's say for $1 million here, and they thought, all right, we're going to make 20%, okay. And so over here, by the time they get to deliver this, it actually cost 1.2 million, and they made 0%. Okay, that was the margin on the deal, and so that's what happened. That's what happened. And thousands and thousands, over 2,000 builders struggled to get over that hump, and many consumers were caught in the crossfire of that. Now, as far as my experience with a lot of our investors, nobody's lost their money. Australia's actually got a very safe system, folks, when it comes to this sort of stuff. Your deposits are held in trust, in lawyers' trust accounts. No one can sort of diddle the till and, nick the dough and stuff like that when it comes to certainly the bigger projects, the off the plan apartments and townhouses. And in reality, most of that stuff is quite safe. The ones that are less safe, and that's not the right way to say it, are the small builder interactions directly with the individual. So if I was just directly to the builder, that has a higher risk of some uncertainty for delivery. Anyway, I'm not going to talk about that today. So, that's what happened. Construction costs surged, input and output costs, which is like input, national, output is localized. So both of those surged, localized cost surge, which is, labor, national cost surge, which is materials, the cost increased. So cost increased. That's where we are now. All at the same time, folks. At the same time, the time it's taken to deliver properties has increased also. All right. So if you look back here, and that's why I sort of have a bit of a laugh on the, hey, we're going to build 1.2 million houses. No, you're not. I talked about this the other day. It's not going to bloody happen as you go. And Tomo, yeah, okay, there you go. You had some fixed price contracts, both, yeah, and that, and the same for me, Tomo. So I had two apartment properties under construction, and I had a house under construction. Now the house passed on a number of increases. I looked at that. I said to the builder, show me some numbers. It was reasonable. I didn't want my builder to go broke. I was still making money. I still got my house delivered, happy days. The two apartments, they didn't pass on some cost increases. And it's not the end of the world, by the way. I would prefer my builder to stay in business and deliver me a good piece of real estate rather than, argue with them and them go broke and me not get my real estate, at the end of the day. But again, that's horses for courses, if you know what I mean. So, yeah, as we go. So, it's taken longer, especially in the world of apartments. Townhouses and houses certainly have ticked up a little bit as well when it comes to time. So time has increased, right? Time has increased. Okay, so time and costs have increased. Have the developers and builders improved their pricing? The answer is yes. I think the new version of the world, we know where we're at. We know the cost of our interest. We know the cost of our labor. We know how long it's going to take now. We know the cost of the materials. Now, what does that mean, folks? It just means that, new properties are more expensive, that's just the way it's going to be. The resetting, it's already underway right now. Alison's talking about one of the, the builder developers we work with, and, they didn't pass on the costs either, so that was amazing. Even though the head builder went under, and so the cost to deliver that stock now, those properties now, way more, heaps more, heaps more. That's not very good English, but anyway, it's heaps more. So if you want to if you want to just check in on, if you want some due diligence, this is some of the due diligence we do at Positive. When we partner with a builder or developer, number one, ASIC search the company. Find out the company that you're buying the property from, the actual company, and ASIC search the name of that company, and the developer and the director of that company. All right. A liquidity search, like Dun & Bradstreet. You can do a search on them if you want to. Search the builder's company name plus the individual folks. Do some notation searches, in Google and a few of those places, right? Check out the resume of the previous work. Research the past developments. Check this one out. Now, this is what Alison was talking about. You guys have seen this in our mentoring, or the mentoring group, right? So, if you have a look at, check out the work of the previous builder. This is an ARIA building. This sort of stuff is amazing, right? They delivered their property, even in the middle of a hard time. So if you think about it, if you're going to, back a builder, if you're going to back a developer, folks, are you going to back one that followed through and delivered even in a hard time? That's the point of checking out, their resume, okay, as you go along. So that's just some pretty stunning photos of something that's kind of cool, right? So, go check that out and, have a look at, a simple Google search. It, helps a lot. So it doesn't take a lot to sort of research a good builder, a good developer, and Sam talks about this often, folks. Sam talks about it, what's called, what he calls brand, right? Brand developers or brand builders. If their brand is important to them, they're always going to invest in that brand and protect that brand and, do the best they can. Doesn't mean it's perfect, but if it's a no-name brand, it's a hidden, it's a no-name director with a no-name brand on it, with a no-name builder and a no-name, property, then, the commitment to completing the deal in the manner that, was sold in the brochure, render to reality. For us, the risk is probably a bit too high, so we don't get involved in those deals. Even though maybe some of the pricing might be, less expensive, the risk is high. So that's kind of the due diligence, in that sort of space. So what's the takeaway, folks? It's going to take longer. We already know that. It's going to cost more, and interest rates are going to stay the same, right? So we know kind of what's going on. Now, does that mean we don't get involved? The answer is no. This is actually normal. This is normal. This is not abnormal. They're like, oh, the first time this has ever happened in history. No, this happens, 3 to 4 times a cycle. Things adjust. And sometimes the adjustment piece is where the friction is. When the things adjust and you're like, hey, happy day. We don't worry when the adjustment's in a positive direction. We only worry when it's, let's say negative cash flow direction or whatever it might be. Anyway, gone way over this morning, folks. Thanks for hanging around. Good to see you on Wealth Coffee Chats this morning. Done and dusted. Remember, got a couple of sayings around here. Buy well, don't sell. This thing's a marathon, not a sprint. But sometimes you just got to check in on some of the things holding yourself back and say, is it real? If it is, fine. What can you do about it? If it's not, fine too. Get on with it. That's my tips for today. Anyway, folks, that's it. Good to see you. Thanks for joining. Take care. Bye for now.